So as we're nearing the end of 2021 and we're heading into 2022, not only do I want to share as many tax tips as I can on how to minimize your tax bill for 2021, I also don't want to lose sight of the fact that 2022 is set up for success. If you do a few of these key things to set yourself up for a great 2022 when it comes to tax savings. So let's talk about what seeds we can plant on January 1st that will lead to significant tax savings come 2022 and beyond. So, here are some of the habits that I want you getting into as a business owner that will absolutely move the needle for you in your small business. And this is one of the biggest ways, honestly, that I see small business owners leave money on the table. This is one of the biggest areas where we miss out on tax savings because the homework wasn't done. And the homework is not that crazy. Let me explain. Okay. So there are different deductions you can take for items that are mixed use business and personal. Okay. So think about, we'll use three examples today. Let's think about vehicles. Let's think about your home office, and let's think about your cell phone. Each of these things can be at least partially deductible. And especially if you live in a uh, high dollar, high cost type of city or town, where rent is huge, rent is extraordinary, or your mortgage is huge to have to pay, you're really going to want to take advantage of this. So let's talk about how we can take advantage of these mixed personal and business use assets for your taxes. Let's start with a vehicle. Okay. When you wake up on January 1, log your odometer. And that could be take a picture of it. That could be just jotting it down. Ideally, maybe a picture is easiest, but jot down what the number was, log it in a spreadsheet, keep track of that, because it will be so invaluable to you to understand the total miles that you drove during the course of the year when you go to compute your business use of your vehicle. Okay. So we have to know the total miles driven in order to make sure you can take advantage of these deductions. So the best tip I would have for you is go take a picture of your odometer on January 1 when you wake up. Okay. Go take a picture of it and make sure you save that into a safe place where you can go retrieve it later. And then every year, if you're doing this every year, then it's basically January 1, 2022 and January 1, 2023. The difference is how many miles you drove during the year. Easy. So you don't have to do some crazy math. You don't have to track every mile you ever drive. Just do the math and take the snapshot on January 1 every year. Okay. So log your odometer, and you're going to get to apply the business percentage of the miles you drive. So you're going to compute the business miles you drive. This is where you're going to have to do some tracking. So you can use an app like QuickBooks, MileIQ. You could use a manual log if you needed to. You could also compute this using Google Maps estimates. Figure out how many business miles you drove during the course of the year with your personal vehicle, and you will get to take a deduction. Not only could you take the standard mileage rate, which is of course a possibility. It hovers somewhere every year between about 50 and 60 cents a mile, right? So you get to take this standard mileage rate depending on what year you're listening to this in, right? They will change every year. Or the more tax advantageous route is to do a percentage of actual costs. So we're talking about your car lease payments. We're talking about repairs and maintenance. We're talking about you need to get the tires replaced. You need your oil changes, other costs, the insurance, other costs of having your vehicle. So the cost of owning your vehicle, and that also could be interest on loan payments, things like that. So the cost of owning your vehicle, you take the percentage used for business. Let's say it's 40% business, and you add up all these costs. And you realize that, oh, wow, I can deduct 40% of these costs as business deductions. And that will likely end up amounting to a bigger tax savings than if you took that between 50 and 60 cents per mile. And here's the thing. This is one of the biggest regrets my clients have. They take the standard mileage rate. Why? Because, oh, I didn't keep track of anything this year, so let's just take the standard. It's the lazy approach is to take the standard deduction, and the IRS knows this. They know this. So you're generally going to get a better tax savings if you do the homework to track your actual expenses. So if you're tracking your actual vehicle expenses, you figure out your percentage, you get to take that deduction on your tax return as a business expense. Now, a lot of folks ask me, well, can I just put the car in the business's name? So you can, let's say you have an LLC, you can put the car in the business's name if it's over 50% used for business. And a great way to prove that is to do exactly what I just laid out, is to actually do the math and show it and have written evidence to demonstrate that. Now, one thing is you can still only deduct the business use of the vehicle. So one way or another, you're going to end up paying partial personal, partial business. Part of it will be deductible, part of it won't be. Okay. So just understand that you don't get like a get out of jail free card. Putting it into the business doesn't, bury everything. You still should be keeping track of what's personal versus business use of the vehicle. Okay. Now, almost always these actual expenses result in better tax savings. And like I said, the IRS knows this and they give you the simplified mileage method because they know that they're going to win if you do it that way. So beat them, win the game, and take advantage of those actual expenses. Now, the same exact concept, the same principle goes around the home and the home office. So let's talk about that for a sec. You're going to want to measure the square footage of what you would consider a home office, which is the space dedicated to your business. It has to be the principal place of business and it has to be exclusively used for business. Okay. So if you've met those criteria, now you can measure the square footage of that space and you can take advantage of a tax deduction based on the proportion of that space over your home. So let's keep it simple. 100 square foot office over a 2,000 square foot home. Okay. 5%. 5% of the home is business use. Therefore, with that 5%, what you'll be able to do is take 5% of the actual expenses to own and maintain the home. Now, for those of you living in places like New York, San Francisco, listen up, because that means your rent, utilities, it could be the interest on your mortgage, your insurance, home repairs, maintenance, painting, like I said, insurance, the utilities, including internet, electricity, all of those things. Okay. So think about the costs that you're spending on your home to maintain your home, to do remodels, to do other things, right? So your business gets to take a portion of that as a deduction. And it's based on the percentage space it takes up in the home. Now, again, the IRS offers a standard rate. They will let you deduct $5 per square foot up to 300 square feet. Okay. And that's just a straight up $1,500 deduction. If you meet those dimensions, right? If you're able to take advantage of that. But with the $5 per square foot, if you live in a place like New York, for example, and maybe your home office is actually half your apartment, if you really qualify, then that's half your rent. Now I'm being extreme here, that potentially this could amount to that, right? And that's not the case for everybody, but be realistic with, this is the space dedicated to exclusively business. And what percentage of that space does it take up? Because you could be leaving a ton of money on the table here if you're taking the standard option. And the standard option, again, it's available to you for simplicity's sake, because the IRS knows that us as humans don't want to keep track of all these extra actual costs. We don't want to go through and do the work and figure all this stuff out. So that's why I'm telling you now, before the end of the year, and as we're getting into 2022, that it's so important to plan ahead and be ready to show this type of evidence to save money in taxes. So this is what you'd have to do for your homework, right? Log your odometer, keep track of your actual vehicle expenses, keep track of your home expenses, maybe even keep a spreadsheet of all this stuff, of what are you paying in rent, utilities, or mortgage interest, right? Repairs, maintenance, insurance. What are you paying in all of these different expense categories per month? And just keep track of those, log them, save the receipts, save the invoices. And next thing you know, you're going to be able to deduct a huge chunk of that if you have a decent sized home office and you're able to prove that you meet the criteria. So don't miss out on that deduction, especially now that many of us are running online businesses at home. This is crucial because it's much easier to argue that this is the principal place of business. Okay. So, on that note, running online businesses, right? Let's talk about your cell phone. What you may not realize is that you can deduct a portion of your cell phone bill. And that means the hardware, the plan, all of it. But here's the thing. Here's my rule. And I've said this many times before, which is if you're deducting 100% of your cell phone right now, if your business is paying for 100% of your cell phone right now, and you're claiming it's 100% business use, what are you calling your mother with? Right? What are you calling your mother with? So if you're not using it for personal purposes at all, and let's be honest with ourselves, we're using it for personal. Yes, we need it for business, but we're using it for personal stuff. We're scrolling Instagram. We're calling our mom, our grandma. I hope so. I hope so. And by the way, reminder, call your mom or grandma if you haven't done so in a while. But here's the thing. You have to be realistic with what you're using business versus personal. And you're probably thinking, Shannon, how the hell do I figure that out? Right? How do I know how much I spent business versus personal? I use it for everything all the time. I'm on this thing like a ridiculous amount of time during the day. Right? Now, here is my best method. Now, it's not perfect, but it's what we've got. And long foregone are the days of minutes where we could figure out how many minutes we spent on the phone with business people versus personal calls. Now we're down to gigabytes of data. This is the best way I know how to do it. So there's a setting in your phone, and I have an iPhone. I know it's in there somewhere, but there's a setting in your phone where you can actually track by app how much data usage you're using over a given period of time. So for example, you can clear out in your phone like 0 gigabytes for everything, right? You can start over, almost like hitting a reset button, like when you do your miles in your car, you can start a new quote unquote trip and you can start over and it'll all say 0. Let that go for about a month. Give yourself a reminder to go back and check on it and just go about your life. Just go about your life for about a month and then go back after about 30 days and look at how much data usage you've used by app and then assign each app as primarily business, primarily personal. Maybe it's a 50-50, but using that, let's figure out of the total gigabytes we used for a month, how many gigabytes did we use for business? And save that calculation, save your screenshots, save your analysis of it, right? To use as a basis, because that's better than nothing. I'm telling you, this will hold up. If you can prove that you went through the trouble of figuring this out, it will reward you. So let's say we figure out that we're, again, 40% business use. That means that 40% of your cell phone bill is deductible to the business. Now, there are a couple of ways to handle these types of expenses. There's 2 ways. One is you pay all this stuff personally, pay all of it personally, and then we take this deduction at the end of the year on your tax return by figuring out what the business technically can deduct. Okay. And we can do that either through a reimbursement from the business, or we could just log it on your tax return, depending on what type of entity you have here. If you have an S corporation, what I recommend is that you set up what's called an accountable plan. And we're going to talk about this in an entire episode, but set up what's called an accountable plan to be able to reimburse yourself for the business portion of these types of expenses so that each month, perhaps, or every other month, you are reimbursing yourself for the business use of your home, your vehicle, your cell phone, things like that. And in that way, it's actually an expense to the business that comes straight out of the business account. It gets booked in your bookkeeping as an expense, and it's right there on your P&L. You know exactly how it affects your bottom line, and you can just take those expenses. Now, again, this is for S corporations who are taking advantage of an accountable plan. And that's something we can help with as well if you're interested in that. So keep in mind that there are different ways to handle these mixed use assets, personal and business. And it's really important to understand that the more evidence you have, the more documentation you have, and the more you do upfront to anticipate these types of tax savings, the better off you're going to be. You're not going to want to miss out on these deductions. and you're going to want to track these things closely. Your accountant will thank you. And this will be a great way for you to save a bunch of money. And I promise it does move the needle. It will add up. And if you're settling for the standard mileage rate or the standard home office rate, that's okay. You're going to get something, but you definitely won't tap into the true potential of the tax savings if you do that. So basically, the IRS cashes in when taxpayers are lazy. So let's not be lazy. Let's be active and let's get proactive about tracking this stuff for our taxes. So, hope you find this helpful. Please, please, please tag me on social media if you learned something today or you're going to start tracking your own mileage, your own cell phone use. I know it can be a pain in the butt, but I promise it's worth it. And please, please share any takeaways you have from this episode with me on social media and tag me at Shannon K. Weinstein. And I will see you next episode.